Let's welcome on board Sandip Sabharwal as well and find out what he's making of the market texture right now. Sandip, hi, morning. Have we fallen enough to see a recovery and a meaningful one at that? At least global markets have rebounded.
Sure. So I think like we were discussing yesterday, in my view, a big part of the correction is over. It's possible that Nifty could give up 300-400 points more from these levels if there is some sudden global shock or as in a continuation of the sell-off. But that is fine. So I think we cannot always try and uh, pick out the bottoms in the markets. So we have to pick out the right kind of stocks at this point of time. So initially, I would think that large cap banks, stocks like L&T, some auto stocks, I think these on the large cap universe should be preferred. And as results come out, we will see if there are some other opportunities coming on mid caps.
Your radar which you would buy on a bad day, and what was on your radar which you already bought?
So we have bought more of ICICI Bank, Axis Bank. We are continuously accumulating Voltas and Aditya Birla Retail because I think those are two stocks in value zone. Near term, people are concerned on their performance outlook, but I believe that they have corrected enough for generating reasonable returns over the next 1 or 2 years.
I want to go back to that FI net short number, and it is at 89% now. FI cash sell number yesterday, one of the highest I've seen, and there were no large block deals, there was no large P exit or something like that. So the positioning of the market, even though we may say, okay, most of the brokerages are bullish on India, most of the money allocators, they want to invest in India, valuations are not at a bubble level, but our fair weather friends, where are you guys? The FI in the FNO market, we look at the net long short, I think is at a record high. FI selling not at a record high, but these are fat numbers which are coming on a daily basis. And Sandip, while we may look at the number and say, okay, why FIs are selling, both of us have a slightly contra view when we look at this data, which is that just tells you there is no euphoria and excitement.
There is no euphoria and excitement, and all of us need to understand that a lot of the foreign fund outflows are not necessarily related to what is happening in India, but what's happening in the emerging market basket. Because many of these funds are ETFs which invest into emerging markets, and it's possible that some of the sovereign funds might be reducing exposure into emerging markets because they tend to follow returns. So when returns decline, they want to protect their returns and as such end up selling. But that's fine. We shouldn't pay too much attention to this kind of funds flow because ultimately this kind of selling only creates value.
Look at some stocks which recovered very smartly yesterday, intraday, and Rudramurthy, they're coming your way. Defense stocks made a comeback. Names like Zomato, they made a comeback. MCX, BAC, they made a comeback. Anything which is catching your attention purely based on yesterday afternoon's or yesterday's price action?
See, for sure, BSC charts look very, very strong to me, and it's a buy at any price kind of a chart. I know, yes, it has definitely moved up, and it has, in fact, from levels of around 880, where it saw the first breakout, from there it is now closer to 1800. I know the stock has doubled from there, but still for me, it's a buy. And any dip like what you got yesterday, an opportunity to enter closer to 1600 was a great buying opportunity. 20-day moving average comes closer to around 1470, and that's a dream price to get. But however, yesterday kind of a dip or any reason because of overall market mayhem, you get it at lower price. Yes, I will have BSC in my portfolio, and it's a good stock even for momentum kind of a traders who want to be into good company. And even for me, MCX also offered a great opportunity, and even at current price I will be a buyer in MCX. And if you can just get it closer to levels of around 2150, it's a great price. But I will be a buyer at current market price and on any dips to levels closer to 2150. And for me, the chart patterns of both BSE and MCX are on a clear buy side. If I have to pick up some more stocks, I do definitely agree with Sanjeev Basin. Yesterday results of CanBank was very good and it offered a great risk reward trade for someone to get into good stock available in F&O for me. CanBank is a really good stock, and I can name some more if you want. Manappuram, another stock which looks very strong to me, and yesterday it was available to you at those levels of 126, 127,
Right.
where I know people were buying this stock at higher level.
Right.
So these are few good stocks to buy.
Okay. So now what we are doing today is that we are asking every expert how do you approach mid and small cap stocks, and that's the special which we are going to be taking forward. So Sandeep, we've got your thoughts on where the correction is moving, but let's say if I have to ask you again, and that's a special, we've got Sandeep, we've got Pankaj, you've got Devina, and we've got Pankaj Tibrewal. So Sandeep, if I have to put this point across on digital and perhaps carry on later shows, my simple question to you is, it may be repetitive, how should one approach mid and small cap stocks now after a sizable correction? 5% on the index, 10% perhaps in some of the ranked names.
Yes, so I think people are concerned about small and mid caps, but big value in India will be created in small and mid caps only. So people shouldn't be scared of investing in them. They need to be ready for the volatility which will come. Some stocks will correct 15-20% from the top also. And there are times when these stocks fall so much, you think that I should have sold before the fall. But after a few months, you realize that, and then the feeling is it's good I didn't sell because these stocks the companies are doing so well and the stocks have moved up. Unless you are in speculative stocks where you don't know why you have bought them, I think small and mid caps in India will do very well next few years.
Murarka, good morning. Same question to you as well.
Very good morning. I think obviously all of us know that the small mid-cap companies, because the smaller size, tend to deliver much higher growth. I've always said this, India is a paradise for growth investors. So I think investors should do what they've always been doing, which is focus on investing into high quality growth companies. And while we're in the midst of this correction, we've seen a meaningful correction in a lot of good quality growth companies' prices. So you use this as an opportunity, have a slightly more longer term horizon. When you invest in mid caps, I would say that one should have a time horizon of at least 3 years when you invest into mid cap companies and invest into high quality growth companies.
This is theory. पंकज मुरारका, ये तो थ्योरी है भैया. अब थोड़ा प्रैक्टिकल बताओ. 2 दिन से मिड कैप गिरा है, 15-20% लॉस हुआ है. Let's have a practical approach. Okay, buy good quality companies for 3 years at reasonable valuations. This is theory, my friend. People right now want to know whether they should cash out of small and mid cap stocks or use the remaining cash what they have to buy into this decline. Let's have a very basic approach here.
I think there are pockets of markets where you can find good companies at reasonable price. So you have to be selective in stock picking. It's difficult. I'm not an expert. I don't know where the markets will be in the next week or 10 days. But I think there are good companies out there, and meaning investors should use this opportunity. So it's more about stock selection than the broader market, because it's difficult to predict markets in the next week or 10 days. But if you have a 2-3 year time horizon, given the inherent growth of India, there are enough number of companies which are growing at 20-25%. So if you can buy some of those companies and just sit tight and on them over a period of 2-3 years, you will make good money. So while there's, meaning as the saying goes, whenever there's panic on the street or there's capitulation, we have seen some early signs of capitulation in the last few days now after this strong run in mid cap, small caps. Having said that, obviously there are pockets of mid cap, small caps where there is a lot of froth also. So investors should avoid those speculative segments of the markets, is what I would say.
Sandeep, where do you find speculation in the market? Because, truth be told, there was a lot of froth which had built into the mid and the small caps. What would you say? Be wary, don't touch these spaces within mid and small caps.
So I would think that there are very highly leveraged companies with very high debt levels where people are playing for a turnaround. And since they are so heavily leveraged and the interest rate cycle is also going up, the probability that turnaround will play out in many of these companies is low, the possibility. So I think those are the spaces, and many of those stocks have moved up very sharply. So people need to be careful about those stocks, I would say, in the small and mid cap universe. X of that, I think longer term growth trends of many companies will never be 30-40%. It will be much lower than that. So wherever valuations have gone up to 60, 70, 80 times price earning ratio, those are never sustainable. So ultimately there is aversion to mean. So if you are in those spaces, I think that's another segment where people should be careful about.
We've been waiting to hear Sanjeev Prasad's view on mid and small cap stocks, and look what he has to say. Valuations remain expensive for the broader market. Mid and small cap stocks have not reached what could be called as fair value. Now, Kotak was one amongst the first brokerage house, slightly ahead of the time. They came out and said that, look, we are of the view that one should not invest in small and mid cap stocks. That famous report from Sanjeev Prasad, which hit our mailbox. Now he's come back with another report. Large cap stocks offer better risk reward valuations, balance sheet more reasonable, and mid and small cap stocks do not offer that kind of a comfort level. He's talking about the category in general. Pankaj Murarka, what are you buying where you think that in next 3 to 5 years, you and your clients would be rewarded for the conviction?
So, Nikunj, given the growth investors we continue to buy into. We'll use this correction to buy into more of internet companies, which we like, because we still think that these companies will deliver very strong growth over the next 3 years, 5 years, and probably over the 10 years. Probably my view, as we've said earlier, we've discussed earlier. Just reiterate. I think that will be the fastest growing sector or segment of the Indian economy over the next 10 years. Apart from that, we like pharma as a sector because we think there's earning resilience in the sector. And more importantly, the sector is coming out of 2 years or 3 years of underperformance and business challenges. And now a lot of those headwinds which the sector faced has turned into tailwinds. So we see good opportunities in pharma across both large caps as well as mid caps, and valuations there are far more reasonable. And apart from that, we like some of the mid-cap banks as well, financials as well, because we think asset quality in the sector as a whole is extremely strong or resilient. We're going through a cycle where, given the strong and very vicious NPA cycle that India had pre-COVID, banks are now going through a cycle where asset quality is extremely resilient or extremely strong, and valuation still remains very compelling. So these are probably the three sectors that we are incrementally dipping into.
Shivangi, I'm just coming right to you. And Sandip Sabharwal has texted me already that 9 baje usko jana hai. Isn't it too late to go for Scotch, Sandip? 9 o'clock? Where do you have to go? Stay back. Okay, but since he has to go at 9 o'clock, I'm going to ask him one last question. Sandip, which are 3 stocks where you would say that I don't care about what is happening on the geopolitical front, I'm not worried about Fed, election cycle do not matter to me. But these are 2-3 stocks which are my high conviction ideas, and I'm happy to allocate within these 3 stocks or 4 stocks 20 to 30% of my portfolio, irrespective of what is happening in the world. These are, like they say, fill it, shut it, forget it. Old hero on that, old hero on that.
So I think it's tough to define that way, but I'll say that on the large cap side, ICICI Bank and L&T would be 2 stocks where I think I would be happy to allocate, and where I believe that next 2-3 years will be good. On the mid cap side, for the longer term, we have holdings in a stock called Wonderla Holidays. I think that's on a very good growth path and that's the only credible player in amusement parks and setting up new parks. It's gone up substantially, but I think it will go up much higher over the next 3-4 years. So that could be one stock. And I would think that Interglobe Aviation is a good stock for investors to hold long term, because the dynamics of the Indian aviation industry are such that Interglobe will continue to do very well, and the way the travel patterns are of Indians, the way the GDP is growing, I think they'll do very well long term. So offhand, I think these come to my mind.
All right, Sandeep, really appreciate your time. Thank you for joining us.